All right, guys, welcome back for another video. Today's title of the video is a little bit goofy. Bitcoin can either go up, down, or sideways. It's a little bit of a poking fun at some of the different analysis that's out there, where people basically say, price can either go up, down, or sideways. Not really great analysis, but the point of this video is to help people engage in probabilistic thinking, because while Bitcoin can go up, down, or sideways, and each of those possibilities is a very real possibility. Those possibilities are not equally likely. So while they're all possible, one has a greater probability than the other. And in order to determine that probability, we have to identify where Bitcoin is in the grand scheme. So Bitcoin is essentially sold off 70% from the all-time high. It's retesting the previous all-time high from 2017. It's found support there. This is the same level where you had a stall for multiple weeks and a consolidation on more of a daily time frame, but a price stall before going parabolic, and prices has retraced into that level. You also have RSI being, at levels, price levels that haven't been seen since Bitcoin's origin. As prices hitting this major support. And price is acting at support at that level. So, if it is acting at support, buyers are stepping in, maybe not pushing it out of the consolidation yet, but you do have buyers acting at that level. Again, this is the all-time high from 2017 marked on this chart. So you can see that price is bouncing off that level, right? And that's a level where, if we go back to the weekly chart, people would have felt extremely lucky to be able to buy this level during the last year of consolidation. But then, of course, price gets there, and there's a different perspective in the market when price is actually there. But at this current moment, buyers are stepping in, stabilizing price. Price is consolidating here. So we could say that support is more likely to hold than it is to break. People objectively know that. We need to treat it as such. So what level would I identify as this breaking? Well, if this level broke right here, now this high right here becomes a swing high, assuming that this high is not violated before this low is violated. So you could look at this as your current range on the Bitcoin price. If Bitcoin breaks above this high, it probably goes higher to fill the gap up here. It could put in a swing failure pattern, but at the very least, we'd have to revisit price after that point. But from the current phase, it can either violate the highs or violate the lows, right? Or go sideways. Now, we've established that this is support, so there's a higher likelihood, an edge of price actually reaching for the highs rather than reaching for the lows. But we still need to mark these levels off, because say price did top out here and then reach for the lows, close below here, there's your invalidation right there. Then that would set in this as a swing high, right? Because you would have a lower high here and a lower high here and a close below the lows, so a break of the higher low structure, a lower low. Now you've got a downtrend. That is your level you're looking at. But until that happens, it's more likely to break up. So, again, an edge is a very slight thing. So maybe it's 60%, 40% chance of not working. It's good enough to make money. But the way I would frame that is, hopefully you took a long position here and were able to get no long. And then the way you could play both sides of this consolidation is, hedge a little bit here, right? So you take profit, and then depending on that gives you a little bit more options based on, if whatever happens. Now, so of course, the other possibilities that price can go sideways, but this is if price did go sideways, then you have a little bit more opportunity to play the consolidation dynamically, especially if it gives you more time before it breaks, whether that's running the lows, running the highs. You want to be buying at the lower end of the consolidation and selling on the higher end until structure breaks. And also, if you want to see volume coming in on that structure break. But I guess the one caveat for this downside break I would keep in mind is that, price could be playing out a Wyckoff accumulation pattern at support. And if that would be the case here, then this would be the initial phase. And generally what happens after this initial run up for liquidity in a Wyckoff accumulation is price will run the range to the downside. So how do you play that while still using this consolidation? Well, you could look for a close below here. And because, again, you don't know if it's going to play off as a Wyckoff or if it violates structure and runs further down. So what you could do is you could still use this level as a invalidation. Really, you could use this white line right here. So, or actually, you could move it up to this open right there. If you get a daily close below there, price is probably going to reach for downside liquidity, which would mean that it would run from 19,000 down to 18.6 or even 19.6. So you would want to be managing risk on that confirmation there. And then if you're looking to play it as a Wyckoff, you could, again, this is not a guarantee, but assuming this does play off as Wyckoff, you could see a situation where you get your first impulse above these liquidity, and then it's got to run the range lows and then close back into the range, do a spring. That would be your sideways price movement. But again, going back to thinking in probabilistic scenarios, I think just based off where price is on the macro, you have to give the edge for price to treat this area as support, whether you're bearish or bullish, right? Anytime you get an impulsive price movement like this down to support, that's weakness right there. Whether you're a bear or a bull, you probably see a little bit of a relief rally off of support level that's this significant. And then, then if you are bearish, you'd probably be looking at some type of retracement. Again, the impulsive price movement down into support was so aggressive that there's a lot of room above for a short covering, short squeeze, and bearish retracement. But if you are bearishly inclined, I mean, that is generally the area where you would be looking for things start getting into that territory when you start hitting this level here that was initially support. And then you start getting into premium when you start getting above this 618 retracement. And then on the flip side, you also have your invalidation up here. So really, I think pretty well before there, but once you get above 48,000, there's really that's kind of the line in the sand for the bears, and there's really not much left to go from there. But anyway, I hope you guys like this video. Again, if you like this content, just leave a like on the video, subscribe to the channel. I'll catch you guys in the next